I have to say that was amazing. There's something I always am very big on. When I used to do a lot of training on markets and trading, and I like to focus on the why, not just the how, right? It's a lot of these groups where it's like, oh, we have this special red or green indicator. If it turns red, you sell. If you buy, when it's green. And that's it. Like, that's all you get. But knowing the why behind it and what's happening in the market and the micro and the macro and, what the big boys are doing, the institute, like understanding the why behind it, you don't get that in a lot of places. You really just don't. And that is invaluable to me. I love that. I loved, guys, y'all got something special here, just to say. So that was amazing. Okay, so can everybody hear me okay and see my screen? Are we good to go there? Just a quick audio video check. Everything good, Kim?
You are great.
Perfect. Okay. Well, thank you. So good to go. Okay. Well, thank you so much again for having us today, and thank you for taking the time out, guys. I know you'll probably have quite a few questions as we go through this. Most of your questions I'll be answering in one of the next sections. Otherwise, we'll try to have a little time for some Q&A, and I'll show you where you can go to get all of your questions answered. So if I don't immediately get to your question here in the chat, don't think I'm avoiding you. I'm just trying to get through all the information and get it out to you and not keep you here too long. Again, thanks for joining us. I want to talk to you a little bit today about our company, Apex Trader Funding. And as always, let's go ahead and start off with some disclosures here. Trading involves risk. Make sure you know what you're doing before you do it. And I want to approach this a little bit differently. I'm not here to give you some big sales pitch. That's not what this is about. I prefer to approach this a little bit more of an educational style. I know some of you have tried prop funding in the past. Some of you might have had great experiences with it. Some of you might not have had so great experiences. We want to talk about that. Some of you might have heard of it, and others have no idea what it is. I just more want to walk you through the industry of what is prop trading all about, what's the point of it, what are some things that you want to look out for, and what are things you want to look for when you're going down that path. So I want to take a little more of that approach with you, kind of educate you on it. Does that sound good? Everybody good with that? Let's kind of educate a little bit, help you understand. So kind of to set a foundation or help you wrap your head around it, let me just ask you a couple of questions as a trader. Okay, so as a trader, and again, guys, don't hop over to our, try to keep up if you can here with what I'm presenting. Don't hop over to our website and start signing up and spending money. I'm going to make sure to get you, wait till the end, I'll get you a discount code here if you're interested. But let me ask you a few questions. As a trader, how many of you here have ever, throughout your trading career, subscribed to a trading newsletter or a day trading plan or like an auto trading system? Or how about signals? Anybody ever done that? We pretty much all have, right? At some point. Basically where you're entrusting someone else with your trading decisions, looking for somebody to follow. Or, even here with Ray, like you're in a group, you're in a trade room, you're trying to learn from a guru, you're looking for somebody to emulate, somebody to follow, right? A lot of people have done, auto trading systems or signals. Basically, you're entrusting someone else with your money. You're trusting someone else with your trading decisions of who to follow. And, they've got some website and all these past historical stats, and you hope they're real, right? I mean, any of us can go make a spreadsheet with some stats from the past. You hope they're real before you're following that person, but how do you really know, right? But if you could watch someone trade in a demo account for a few weeks and see for yourself, have them prove it. Yes, I can trade. Yes, I have a system I follow. Yes, I have good risk management. Watch my performance. Watch me build. Watch me, handle some different type of market days, some different volatility. You can see I can get through it. Like if you could see it in front of you and it was proven to you over a little bit of time, then you're probably a lot more comfortable giving that person your money or following that person trades, right? Seeing that they can get through those different times, those different swings, and seeing that proof. And so just like from a trader's standpoint, many of you have looked for that type of person. I want somebody that knows what they're doing. I want to learn from or follow or emulate someone that knows what they're doing. You're willing to do that, especially if you can see them perform first. Then you're willing to follow them or willing to do a profit split with them if they're trading your money, or even follow them separately, whatever it may be like, right? Okay, yeah, someone like Ray, right? So it's no different for a prop fund company or for a trader funding company. We're literally looking for the same thing, right? So what is trader funding? It's very simple. First of all, we offer prop fund trading for futures only. Okay, currently we don't do equities or options or forex, just futures only. And it's very simple. Prove that you can trade consistently and profitably without massive drawdowns or massive losses. And then, prove you can do that by following a few simple rules under a few simple guidelines. And then you qualify for a paid performance account, all right, which is access to trade an account, all right? And those splits are 90-10. The trader keeps 90%. The company keeps 10%, okay? That's how we make our money. All right. Why would a company do that? Like, what's the catch? What's the point of this? Why? Well, if you've got a group and you've got a group of investors and backers of a prop fund, it spreads out risk, right? How do you find consistent traders that can bring in consistent profits that can be split? Not just one trader with one system or not just one algorithm, but a diversity of markets that are traded. Some traders are trading gold or oil. Some are over here trading the grain. Some are trading, the stock indexes. Some only trade overnight for Europe. Some trade the New York Open. It spreads it out. So it kind of diversifies the markets, diversifies the systems, duplications, and it's a spreading of risk. And like I gave the signal example earlier, looking for somebody to follow that knows what they're doing and getting behind them and doing a profit split. That's how a prop fund works. That's how trader funding works. That's the point of it and what we're looking for, okay? So that makes sense, right? Now, why would a trader ever want to use that? Okay, well, what are some of the challenges and needs? There's a lot of people out there that, hey, I'm interested in trading. I've heard about it. I'm watching these videos on YouTube, or I'm learning from someone in a group, but I don't have enough funds to even open an account, right? Or hey, I've got an account, but I don't really quite have enough funds to trade the size that I want to trade. I want to go bigger. I want to trade more. Okay. Or look, I want to trade, but I'm nervous, right? I mean, we've got a lot going on in the world right now, don't we? Bad news hitting us left and right, and food shortages coming, and this and that happening. Hey, I'm a little worried about risking my investment account, or my own savings account, or the kids' college fund, or whatever it may be, right? Or this random news that comes out and creates volatility in the market, and the market can spike against me out of nowhere. And I'd rather not. I want to trade, but I don't want to risk all of my funds and just blow my account, right? I mean, especially over the last few months, you guys seen how some of these markets are crazy volatile. Or days where it's gotten so volatile that the margin changes. Of, hey, I was doing okay with my account, but now the margin's just doubled. I can only trade half the size. I don't want to be stuck under those type of restrictions. I'd rather have a larger account that I could trade. I'd rather have risk capital that I could risk that's not my own capital, that's not my own savings. I can keep my own savings. I can keep my own money and invest that elsewhere. Have that as a safety net. Have that as a backup with some of these uncertain times. And use risk capital for trading that's provided by someone else. Okay, so, guys, and think about some of the top traders or that you hear about. Most of those top traders are not trading their own funds. They're institutional traders. They're hedge funds, right? Also, what this does is it can offer a whole different mental outlook, right? How many of you over your trading career you started off in demo, and you're learning, you're figuring things out, you're testing out a new strategy or system, or you're trying to learn something here, or even that Ray's teaching you, for example, and you're doing good in demo. You're mastering it. You're being profitable. Your demo balance is growing. You feel like you got it, right? Hey, it's time for me to go live. And you go and you open up a live account, and then you start trading that live account, and what happens? What happens after that point? We've all been there. We've all seen it. We've all done it. Yeah, it's suddenly different, right, Sebastian? It's like, what happened to me? I was doing great. Like, I was killing it. I had this. I was growing my demo account. Then I go over to live. I blew it. I'm losing money. What's going on? And exactly, it's mental. It's mental because suddenly this is real. Suddenly this is real money. Suddenly you actually have something to lose, right? Or suddenly there's a real opportunity to withdraw real money, and it messes with your head. You start second guessing yourself. You start pushing the button late or pushing the button too early, scared to push the button at all. You have a lot, it's one thing in demo to be like, I had a bad day and that wasn't great. I'll be back tomorrow. Suddenly when it's live and you're down, you took a loss and you're down, then what happens? It's this whole revenge trade mentality, right? I've got to get back up. I've got to make that money up. I wanted to be profitable today, but now I'm down. And then suddenly, mentally, your mind goes somewhere else where you're not even worried about having a profitable day anymore, are you? You're just worried about what? Getting back to zero, starting from zero. And you lose focus of, I need to follow my rules. I need to follow a strategy or system. I need to look at what's really going on. You're just worried about a number, and it messes with you, right? Little show of hands here. I like to be a little interactive. We've all been there, right? We've had that happen. There's a huge mental side when it comes to not risking your own money, and it helps take away some of those fears and bad decisions, and can make a huge difference in your trading. Okay, so I hope you can see that side of it too. How many people here have tried prop trading in the past, or some of these other funding companies that are out there? Like just a quick show of hands. Okay. So look, guys, let's be honest. We're not the only rodeo in town. Okay. There are other funding companies out there. Okay. How many of you tried one of these other funding companies and found that you pretty much had no chance of passing the evaluation and ever getting funded because they had extremely super tight rules and a lot of rules and a lot of guidelines and a lot of little fine print that felt like they're pretty much just there to knock you out and literally just there to make you fail the evaluation, and that's what the whole thing was about. And you paid for and bought an evaluation, and you failed it. You got kicked out. And then you had to pay to retake it, and you had to pay to retake it, and pay to retake it. And after some point, you realized this is pointless. I mean, I'm just being honest, because that's what most of the industry is out there. And that's what I want to talk to you the most about. Okay, this is the most important thing you need to get from this webinar is, look, there's a lot of huge advantages to prop trading, right? We just talked about some of them here, about not risking your own funds and not be worried about having enough to do the size you want, not be worried about margin calls, not be worried about risking your money. The huge mental advantage about trading someone else's money. You guys get the advantages, right? You get that. So I want to make you aware of what you want to look for out there that can be a disadvantage. All right, because unfortunately, that's what a lot of this is built on, is companies out there just there to get your fees. They don't actually have true prop funding. They don't ever actually back you with real live money. They have no plan to ever even really fund you. It's just all about getting the fees and keeping you running and running and running for that carrot. Some of you felt that way, right? With some of these companies you've tried out. I won't sit here and mention names or badmouth names. I want to give you the tools in your hands to know, okay, I get the positives for this. What do I need to look for? What do I need to look out for? Okay? So here's what I like to do, if you'll just kind of let me go on a little bit of a rant here, because I think this is very important. Here's what I like to do to help you understand is put yourself in our shoes. Put yourself in the place of being the person funding the money. You're funding a trader, right? So, you know, a few of you said, yeah, I've tried this out before, okay? Dylan, Donna, Mark, David, Simon. So let's just say that you've got $100,000 sitting in your bank of your own actual savings money. Some guy comes along and says, hey, I know how to trade. Give me access to that money. We'll do a profit split. Okay, interesting proposal, right? Well, Dylan, if I come to you and say, hey, you got 100 grand, I know how to trade, give me access. Are you going to say, oh, okay, John, hold on. Here's my username and password. Well, hell no, you're not. You don't know who I am, right? You have no idea. You're going to want to see, well, hey, prove it to me a little bit. Oh, well, look, here's my historical stats on this spreadsheet. Okay, well, my 8-year-old can go type numbers on a spreadsheet. That doesn't mean anything, right? Prove it. Exactly, Dylan, prove it. So you say, hey, John, let's open up this special demo account. Let's put some rules and guidelines to it. Prove you can trade over a few weeks, right? Like, can you be consistent? Can you be profitable? Can I see that you actually have, you know, a strategy or system? And then, hey, after I see that, let's talk then. Let's get back together. Let me get you access. We'll start doing a split. That makes sense, right? Nothing wrong with that. You would want that if it was your own money that you're going to hand over to someone, correct? You'd want them to prove a little bit. So that's an understandable rule. Now, what if I said, or what if you said, okay, John, here's some rules, right? Because it's your money, so you'd want to put a few rules in place, yeah? Like, hey, let's make sure we protect this a little bit. Let's have a few rules, okay? And you said, well, hey, John, I'll tell you what. To prevent super scalping, I don't want you to be in a trade for less than 2 minutes. That way I know that you're not super scalping the market. Okay, on the surface, a lot of people will think, oh, that's a good rule because they're trying to protect liquidity and super scalping. Okay. Are you kidding me? Who trades NQ, for example? Anybody trade the NQ? Do y'all trade NQ in your room at all? What can NQ do in 2 minutes? A lot, right? A freaking lot. Like, there's a lot of times that traders that are scalping NQ are in and out of a trade in like a few seconds, right? Because it gets you those 10, 15, 20 ticks, whatever it is you might be going for on a small scalp. Does it make any sense whatsoever to say, like if it's your money, if it's your 100 grand, would you ever tell a trader you can't be in a trade less than 2 minutes? Is that smart? Does that protect the trader? No. Does that protect your money? Hell no. It puts your money at risk. It's a dumb rule. But guess what? So why would I have that rule? Does that rule protect something? Is that a rule that I would want if it was my own real money? Or is that rule there to literally screw you over? Yeah, Praveen says, yeah, it could wipe out your account. So a rule like that, if a funding company has a rule like that, is that a rule that's there to actually help? Is that a rule that you can say, hey, I'd have that same rule, it makes sense? Or is that a rule that's like, yeah, that's going to screw me over and over and over, make me blow that test account, and I'm going to have to pay again to retake that test? Ding, 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 light bulb. Does that make sense? Or what about the opposite of that? Hey, you can't be in a trade for longer than 10 minutes. Because we want to make sure that you're not staying in too long, trying to hang on to a trade too long, letting it run, or like you're walking away from the computer to go do something, leaving a trade on, risking my money. Oh, okay. Yeah, that makes sense. You don't want me to be in longer than 10 minutes to protect your money. Okay. Have we ever heard the whole manage your risk but let your profits run? If I've got a system that trails and that market is just plowing on a trend, I want to be able to ride that out, yeah? Yeah. Like, neither one of those are good rules. Okay, so I could go on and on and on. There's a lot of companies out there that you can look through their list of rules and their fine print, and you just be like, well, why is this rule there? That rule does not help me at all. That rule is not a rule I would put on my own money. And I can go on and give you a list of these rules, guys. But does that make sense right there? That's your filter. When you're looking at these different prop funds, the very first thing you want to ask yourself or ask them is, do you have a true path to a true prop fund? Meaning, do you actually end up putting good traders into live money to split with them? Or are you only getting the fees, and the few traders that do okay, you're paying them their profits out of your fee? It's a fee-based business. Does that make sense? Okay. The second thing is, what are your rules? Because if there's a rule that you wouldn't put on your own money, there's a reason for that. Does that make sense? So if you're like, hey, that rule actually would hurt, then there's no reason for it to be there except to make you fail and get another fee out of you. It's that simple. Those two filters right there will navigate you through 95% of knowing who's good out there and who's not good out there. Are you with me? Like, most of this is common sense. And if it doesn't make sense, it's nonsense. What are our rules here? Okay, hit a profit goal, right? Let me just show you some here. Now, I don't get distracted by this or hop over to the website, but I'm going to just pull over our website real quick here because I want you to understand what I'm trying to show you. So if you go to our website later, don't do it now, pay attention. Apex Trader Funding. You can go through a couple videos, some information, scroll down. Right here is a list of different plans, okay? We have plans anywhere from $25,000 virtual account all the way up to $300,000, okay? And everything in between. Let's just say, for example, one of our probably most popular plan for like short-term scalpers, let's say it's the 50K account, okay? So real quick here, what are some of the details of that particular account? All right, well, you can do up to 10 contracts, all right, which are minis, or you can do 20 micros. To pass this evaluation account is a profit goal of $3,000, a trailing threshold of $2,500. In a nutshell, can you make $3,000 without losing $2,500? Make sense? Okay. Now, each of the different plans are different sizes. They have different contract amounts, different profit goals, different trailing thresholds. All right. When you look at this, don't just look at the pricing and don't just look at this big number of, ooh, I want an account that's 50,000. I want an account that's 100,000. You got to look at these two numbers right here. Okay, the profit goal, but maybe mainly the trailing threshold. What do I mean by that? Just real quick. So let's say that you're a scalper. You're just going for 10, 15, 20 ticks. So let's say your stops are smaller stops, right? Does that make sense? Okay. Miguel says, is that profit goal a daily goal? No, Miguel, that's just the overall goal to pass the evaluation. It doesn't matter whether it takes you 10 days, 10 weeks, 10 months, okay? There's no requirement to trade daily. That's not about, no, that's not a daily goal. It's just like, hey, if you get this package, can you trade and make this much without losing this much while you get there? And I'll go through that a little bit more, okay? So let's say you're a small scalper. You just go in for 10, 15, 20 ticks or something. Your stop loss is probably not 100 ticks, right? Like you've got a small stop. So if you're using a scalping strategy and you've got smaller stops, then you might be okay with this, right? With the stop threshold, stop trailing threshold, we'll talk about that, of $2,500. That might be enough room for you, right? But let's say you're taking some longer trend trades and you know that market can pull back quite a bit, right? Ray was talking about that earlier, right? About the pullbacks in the trends. Well, that might not quite be enough of a threshold for you. You might want to give yourself some more room and look at some of the other different accounts that have bigger thresholds. Does that make sense? Okay. Now, what if all I am is just a scalper with smaller stops? I may not necessarily need a bigger account with these huge thresholds either. Kind of like picking the right tool for the right job, right? Okay. So we're going to talk about this a little bit more. I just wanted you to kind of see some of these different packages and how this was set up. So this will make a little more sense to you here. So yeah, or you trade smaller size, or you trade micros, Lori, you know, instead of minis. And just because you can trade 10 contracts on that particular evaluation plan doesn't mean you should. Just because you can do something doesn't mean you should do something, right? You don't have to do the max. So what you'll always hear me say is I always put this back in your hands and in your mind of, if this was my money, what would I want? Okay? So if I come to you and say, hey, you got 100 grand, give it to me, let me prove it to you. You'd probably say, okay, well, let's get a demo account, virtual account, let's set it up under some guidelines, and over some time, can you get the $100,000 account up to $105,000, right? You'd want to see some type of goal there, right? So hit the profit goal, don't hit the max loss, like what I just showed you there. Are those two rules more than understandable? Like if you want to be evaluated, here's a simulated account, choose the size you want. Can you reach a certain profit goal without hitting a drawdown? You would probably ask the same for someone wanting your money, right? Easy rules there. Totally understand that. Now, what if you said here's a demo account, 100 grand. Can you make five, or hold on, let's cover this one. In the futures market, what happens every day at 5 o'clock Eastern time? From 5 Eastern to 6 Eastern, what's happening in the futures market? Yeah, and then it closes, right? And then at 6 p.m. it opens back up. Anyone ever heard of a gap trade? A gap open? Or when that market closes at 5 p.m., it's at 100. When it reopens at 6 o'clock, it's boom, instantly at 120. A gap open can kill you. Anybody ever been lost an account or lost a lot of money from holding into a gap open? Yeah, Sebastian said it opened limit down in CL. I didn't look at CL this morning. How big of a gap was it, Sebastian? Do you know? Oh, in the crash? Okay. But you guys understand what I'm saying, right? A gap open can instantly, like, you're down thousands. If you were going to give some trader access to your 100 grand, would you say, hey, let's just close before 5 o'clock so that we don't get hit with a gap open? Let's protect our money. Now, if that market opens back up at 6 p.m. and it's still heading in your direction, hop back in. But how about we not hold through in your direction? Hop back in. But how about we not hold through gaps from day to day or over the weekend? Is that a realistic, understandable rule that you would probably put in place on your own money? Of, hey, let's just not hold through gaps. Let's not take that big risk. Anyone here have a problem with that rule? Anyone feel that's an unrealistic rule? It keeps some control. It keeps things safe, right? Totally understandable rule, okay? That's not, is that a rule that hurts your trading and hurts your performance and your balance, or kind of protects the investment for both sides? It's an understandable rule, right? Okay, so Dylan, you give me access to 100 grand and say, hey, let's see if you can make 5 grand without losing too much. Okay, cool. And I call you back in an hour. I say, hey, Dylan, I'm up 5 grand. Give me access to the real live money. How are you going to feel about that? That I did it in an hour and I call you back and say, all right. Yeah. I mean, my 8-year-old can press buy or sell and be right half the time, right? Yeah, it's like not quite. Like, I don't want to see a lucky windfall. I want to see that there's actually some trading there, okay? So 10 days minimum is all we ask. So here's an evaluation account. We want to see, can you make 3 grand without losing 2,500. All right. We don't care if it takes you 10 days, 10 weeks, 10 months. You can do it as long as you want. You don't have to trade every single day. There's no minimums like that. Okay. It's just we want to see that you've at least traded 10 separate individual trading days to have gotten there, to have gotten to that profit level to pass. Now, it doesn't matter how long it takes you, but we want to see at least 10 days. Does that make sense? Because over 10 different individual trading days, you've probably handled some trending days, some range-bound days, some choppy days, maybe some news days. We can see that you've navigated through the waters of some different type of days. You've stuck consistently to a strategy or system, to the risk management. Not that you just went out and made it in one quick lucky windfall. Now, there are some companies out there that make you go through 3 different evaluation phases spread out over about 6 months before you can ever graduate into a live account. That's a little bit extreme. We don't need 6 months from you, right? But a few weeks, we probably want that. What do you think's the key behind, well, you got to go through this first 2-month evaluation, and it's got these rules. Then we're going to make you go through a different 2-month evaluation, and it's got a little bit different rules. Then we're going to do it. What do you think that's there for? Just drag it out as long as you can, mix up the rules, and hope that you're going to fail it at some point and have to start over from the beginning and pay me another fee. You understand? That's what it's there for? All those crazy rules? You don't need all those crazy rules. You need some protection in place just to make it clear, look, this person can trade. They did it over a little bit of time. Good. We're good to go. What's the final rule? Don't give out your username and password to someone else and let them trade for you. If I'm going to fund you, I want you to do the trading. Wouldn't you want the same, right? If I'm saying, Dylan, give me $100 grand to trade, but I actually give the password to some guy I know over here that can trade real well, and you're like, ooh, I'm impressed. Now you hand the reins to me, and it's like, what the hell just happened? Are any of these rules ridiculous rules that you have a problem with? Or rules that you wouldn't put in place yourself for your own money? Do any of these rules hurt your trading, hinder you from being profitable? Are any of these rules listed right here just there to try to get fees out of you? Because that's it. Those are the rules. Like, there's no more, there's no other fine print, complicated rules, making it hard to pass. Prove you can trade. That's all we want to know. Right? Can you be consistent and profitable? And we make 10% of that. We're happy. We don't need any more rules than that. Okay? So, either you can or can't. That's it. It's not there to set you up to fail. It's there to be an evaluation. Evaluate that you can do it. Okay? So, I spent a lot of time on that, guys. But does that help you here? Kind of educating you about the industry? Whether you go with us, whether you go with some other prop fund, or whether you decide, hey, I'm not going to use prop trading money. I'm just going to use my own. That's fine. But I want you to understand what you need to look for out there and what you need to look out for. Okay? So did that help a little bit? Kind of give you some of that information, kind of arm you with what to look out for. Because it's really that simple. Okay? So what's the process? Again, you can qualify in as little as 10 days. Some of these places want you to go through 6-month processes. We just do the one-step evaluation. We're not making you do it over and over again. Fees versus funding. We kind of covered that. Not just there to get fees from you, but looking for consistent, profitable traders to actually fund. It's a long-term relationship of funding and profit splitting, not just a short-term relationship to get as much fees out of you as you can as quick as possible. Okay? So like I showed you there, you choose an evaluation account, ranging anywhere from 25 grand to 300 grand. You immediately get your username and your login by email. You also have full access to everything in the back office right away. Again, you don't put up funds. You don't have to deposit funds into an account. You don't have to open up a brokerage account. Okay? You choose the evaluation account you want. Once you pass that evaluation account, those evaluation fees go away. The only thing that you pay ongoing once you're in a funded account is an $85 fee for what we call the PA account, the paid performance account. That covers platform, data feed, wire fees for withdrawal. That's it. Okay? There's nothing else you really have to buy here. I mean, as soon as you sign up for the evaluation account, you get the account, you get the, give you a NinjaTrader free key, you get Rhythmic data feed. It's all included. There's not other things you have to go buy going through these evaluations. Okay? We use it on over 20 platforms. Now, NinjaTrader is our preferred platform. It's the platform that we provide support on. It's the platform that we provide a free license key on for you to use during the evaluation. But the program does also work on these other platforms listed here as well. Okay, I know y'all use 2 or 3 different platforms based on what you're trading in your room. Guys, I know I'm going through some of this a little quick. I'm going to show you where you can get a lot more information. I just want you to understand some of the basics here. So, like I said, how does it work? Once you've signed up, you can begin trading. All right. Again, a minimum of 10 days to be traded. All right, it doesn't matter how long it takes you. We just want to see 10 individual trading days in there to know that you've traded some different market condition and it wasn't just a lucky windfall. All right. Once you hit your profit goal without hitting the max loss, and there's been 10 trading days, that's when the evaluation account moves over into what we call a PA or paid performance account. Already talked to you a little bit about closing trades by 4:59. I jumped ahead a little bit there because I think you guys were following me. So what if I fail the evaluation? What if I get started tomorrow and in 2 days, like, oh, I made some rough trades and I blew the account. Do I start all over and pay the full price? Do I have to wait? No, you can go in and reset the account anytime you want. Resets right back to the original balance, the original goals, the original trailing, and everything. What are the payouts? Once funded, we pay out the first $10,000 of profit at 100%. There's no profit split on the first $10,000. It all goes to the trader, okay, for the first $10,000 of withdrawals, okay? Yeah, Lori says a small fee for reset. Yeah, exactly. Some of you might have seen lately out there, there's a couple of companies that are doing resets on the actual prop accounts, like the performance accounts, for like $1,500 for resetting. It's like, come on. Like, come on, you know? Why do you think they're charging so much for that? It's because it's those fees that they're using to pay you out. When you're actually in a true prop account and you're trading, the money to pay you out is made from the trading because it's real live money. You've got to be careful for these companies that are all fee-based because for the traders that do make it through and then they got to pay out a profit split, there's no real money there from trading. The profits they're paying you out are all coming from their fees. Does that make sense? So what happens when you have a couple of great traders? It only takes 1 or 2 great traders to blow one of these fly-by-night companies out of the water. And you see these new ones popping up left and right on Facebook ads and social media, these no-name new fly-by-nights. It only takes a couple of good traders to knock them out or for them to deny you a payout, right? So after that, we pay out 90% of the profit to you, okay? That's the payout structure. I'm going to touch on this real briefly. I don't want to spend a ton of time because I'll show you where you can watch a full video about it because I know we're limited in time here. But what does it mean, max trailing drawdown? Okay, so let me just show you over here. So remember what I was showing you here, the different plans, okay? And each one had a profit goal or it had a trailing threshold, okay? Like, can you meet this profit goal without losing this much on the trailing threshold? What does that mean and how does it work? Very simple. Let me kind of help set the foundation here for you so you understand it. How many of you in the past or recently How many of you at some point in your trading career, you're sitting there, you get a signal to go long, you press the button, you buy, market's going up. You're up 100, you're up 300, you're up 500, you're up 700. You're like, this is great. Maybe I should close this trade and take my profit. Or maybe I should trail my stop up and protect some of that profit, but you don't. And then you're up 800, then you're up 1,000, then you're up 12, then you're up 1,500 bucks. And you're like, this is great. But I feel in my gut, I feel like this is going to keep going. I feel like this market's going to explode. Maybe today is my day to have that big, huge, Godzilla-sized trade that people talk about. Maybe it's my day to make that $20,000 profit trade. I'm going to hang on to this. You ever been there? I think we're all lying if we say no, right? We've all been there, right? And then, so you're up like 1,500 bucks. So, Dylan, I'm going to use you again. If you gave me access to your 100 grand to trade, you're looking for a long-term, consistent relationship there, right? You're not looking for me to go out and in the first week or two just go for the moon, full contract, risk it all, bet the house, try to make six-figure and then lose it. You're looking for long-term consistency, right? So if I'm in this trade and I'm up 1,500 bucks and I tell you, hey, Dylan, I'm up like 1,500 bucks right now in this one trade today. What's your first thought going to be, Dylan? Bro, close it, right? Take the money and run. Or, bro, protect it. Like where's your stop? Well, my stop's still way where it was before. When I entered the trade, my stop was a few $100s below that. I haven't moved my stop because I want to give this trade some room. How are you feeling about that? It's like, okay, you know, like maybe we protect some of those profits and we build, right? So we've all been there. We're in this trade. We're up 1,500 bucks. Now it starts to pull back against us, right? Now we're only up 14. Now you see the P&L. You see it go down 14, 13, 12, 11, 1,000. But you say, well, hey, I'm not scared. That's what happens in a trend, right? The market doesn't go from A to B straight line. It goes up and pulls down, goes up. So we're in a pullback, just like Ray was talking about earlier, right? So you're like, I'm not real worried about it. It's going to come back. You expect a pullback. Then the next thing you know, your profit's down to 800 and 600 and 400. And what are you thinking? Oh, maybe I should go ahead and close out and just take what profit is still here, right? But I was up 1,500 a minute ago. Now if I close out at 500, I feel like I lost out on 1,000 bucks. Right? We've all had these mental thoughts, right? It's like this whole conversation in our head, managing this trade. And it's like, had you closed out, you were up. But you feel like, oh, well, I missed out. But I feel, my gut tells me I feel like I was right. I feel like it's still going to blow up and go long. Oh, wait, but now it's still coming down and I'm back to zero, back to where I started from. And then what do you think to yourself? Well, maybe I should go ahead and close it out now, just start fresh. You know, no harm done. I'm not down, but I still feel like it's going to come back. Well, now I'm at negative 200, and now I'm at negative 300, and now I'm at negative 500. Crap, I better close this out. Maybe those are extreme examples, but how many of you have ever been there? You were way up in a trade in profit. You let it come all the way back down to zero, and then you let it go down and go negative. Yes, no, you've done it, you've seen it. Yeah, I think we've all done it, right? And Did you regret doing it afterwards? Did you wish you had trailed those profits and kind of tightly protected them a little tighter and held on to it? Yeah, we've all been there and done that, right? Do you really want somebody trading your money that way? Or would you like to see that they protect that money a little bit better in the beginning to build a little buffer in there? Is that unrealistic to ask? Would you want that if somebody was trading your own money? In the beginning, to build a little bit of buffer in there, right? Like, hey, let's not have those big swings. Let's build up a little buffer. Let's protect some. Look, now we've built this up a little bit. If you want to take some longer term trades, have some little bit bigger pullbacks, but we've got some cushion now between our balance and where we started, right? Make sense? Okay, so with that understanding in mind, how does the trailing threshold drawdown work? Okay, I'm going to cover it just kind of briefly, and then I'll show you where you can get a lot more information about it. Because in that scenario right there, okay, let's say I've got a $2,500 trailing drawdown. Okay, you with me? A trailing drawdown or trailing threshold can only go up. It doesn't go down. The balance in your account can go up or down. But if I'm in a trade and it goes up $1,500 in profit, while I'm in the trade, while I'm live in the trade, not when I close it, but while I'm live in the trade, it's gone up $1,500 in profit. Well, my trailing threshold has also come up $1,500. Does that make sense? What do you think that's there for? I mean, you've still got 2,500 total, right? But it's come up. Like if you imagine two lines on the chart. One line is $2,500 behind the other line, but they're both going up, 1,500. It's there to help this right here, to prevent not trying to go for big lucky windfalls, make it all in one trade, but be consistent with it, okay? Sebastian says, but hey, but then I only have 1K left just because of the move. No, that's not the case actually. You still have 2,500 depending on how far you let it come back against you. So yes, if you went up $1,500 in profit and then you let that trade come all the way back down against you $1,500, then yeah, you've only got $1,000 left. See the point? So that in the beginning, you're not letting those trades come back against you. That's part of the evaluation. It's kind of part of the test of, hey, can you do this of a more consistent basis, a slow growth build there, not taking the huge big swings, okay? But you're only having that, okay, if you let it come way back against you, okay? Sebastian says, well, before you were talking about NQ and highly volatile markets, quite difficult to trade thin markets like NQ with that. Well, again, that was just an example. I mean, also, it really depends on how many contracts you're doing and what account you're doing. I was using the example there of a $2,500 threshold. I mean, some of our evaluation accounts have a $7,500 threshold. Make sense? Okay. So just real quick here. Now, by the way, guys, once you're moved into a funded account or a PA account, after you pass that first initial drawdown there, it doesn't keep trailing. It stops. Okay. It's just there to create that little buffer right there. It doesn't keep trailing. Okay, so it's there during the evaluation. It's there at the very start of a paid performance account, but then after that first 2,500 trails, it stops. All it does is create a little buffer for you. It doesn't keep going. Does that make sense? Okay, so real quick here, just to show you a quick example, then we'll move on. I'll show you where you can get some more information. Okay, so let's say you start off with a $50,000 account and you have a $2,500 max loss. So what does that mean? From day one, your balance in the account will show 50 grand, but your threshold is $2,500 behind that at 47.5. Right? Everybody with me on math class there? Okay. So you hop in a trade, you make 500 bucks. So now your balance went up 500 bucks. Your balance is at 50,500. Your threshold level is $2,500 behind that. Meaning, so now your threshold is at 48. So your threshold can only go what? Up. Right? Everybody with me? Now, on the next trade, you go in and you lose 100 bucks. So now your balance went down 100 bucks, but your threshold stayed where it was. The threshold doesn't go down. Make sense? So your balance itself can go up or down. Your threshold only goes up as your balance reaches a higher profit level than it's ever been at in the past. You with me on that? Okay. I'll show you where you can. There's a video where I go through this on the PowerPoint, and then I go through it on a spreadsheet example, and then I go through it on 3 live trades, so you can actually understand and see how it works and know how to beat it and work around it. Okay? You can actually understand and see how it works and know how to beat it and work around it. Okay? Look, it's only there during the evaluation account, and then Sebastian, right here is what you want to see. Once you move over into a paid performance account, so let's say you get a 50K, Sebastian, you get a $50,000 evaluation account, and you pass it. It then turns into a $50,000 paid performance account, okay? So when you start in that paid performance account, you're back to where you started. You've got a $50,000 balance, and your threshold's at 47.5, just like in this example here, okay? But once your balance gets up to like 52.6, meaning your profit level, whatever, has gotten to 52.6, and that $2,500 threshold has followed up with it, okay, it stops as soon as the trail hits $50,100. What is that there for? What is the funded account balance? 50K. We're adding 100 bucks to it, and then it stops. All we're doing there is protecting the balance. The trail doesn't keep going with you when you're live trading. Does that make sense? Yeah, exactly, Sebastian. So your trail will stay, your threshold will stay at $50,100. Your balance is up there at like 52.6. And you could keep trading a little smaller and building the account and building the account and building the account, and now you're at $60,000. And you've got 10 grand of room to go trade big swings, larger moves, larger trend pullbacks. Does that make sense? So yes, is it easier to pass the initial evaluation and the initial part of the paid account by trading smaller, by trading a little more safely, by focusing a little bit more on scalps, or a little bit more on, hey, how about I have a consistent trading strategy or system that I can show to them, just maybe take a few trades a day with nice profit, let it build up, let it build up. Okay, got it. Start the new one that way. Okay, proving that I can do that, not just go for wild swings. Build a little bit of cushion in there. I can trade how I want because I've got plenty of room. Does that make sense why that's there? Does that help out a little bit? Okay. So, guys, I know we're going way over here, but I hope this is good information for you. So we've talked about this, how we're different from some of the other ones out there. We have the highest payouts. We have the simple one-step evaluations, only looking for 10 days minimum. You can trade as many accounts as you want. I'll show you what that means. You can have multiple evaluation accounts. We don't do scaling, meaning what I mean by that is, let's say that on this account we let you trade up to 10 contracts. There's other companies out there that if you accidentally pressed 11, or if you were in 5 contracts and you wanted to add in some more and you actually added in 1 extra contract, boom, kill your account. We're not going to do that. If you try to place an order and it's over the limit, you get a little error message that says, hey, you can't trade that many. Redo it. Oh, my bad. I'm not going to fail you out just because you tried to trade 1 extra contract. That's ridiculous. We don't have end-of-day drawdowns. We only have that trailing drawdown. There's a lot of companies out there that have intraday drawdowns, end-of-day drawdowns, or even single trade drawdowns, just making it easier or harder to keep track of what the hell you're doing and when you're doing it. We don't have the minimum requirements. Lower cost, get the ninja fee. I'm just trying to, what instruments can you trade here? Just trying to rush through some of those we already covered there. We've got the equity futures, we've got the interest rates. I know some of y'all trade some bonds, the energies, the ags, the metals. Guys, I'm going through this quick, but I'll show you where you can get all this stuff as well. Okay. Does the risk and contract size grow over time depending on the account size growing? Once you're in an actual true prop account, okay, we can look at that every, say, 90 days. If you request of, hey, I'd like a little more, and we can evaluate that, yep. Okay. So all the different instruments are there, okay. Real quick here, I want to go over one thing, because I know a couple of y'all said, oh, yeah, you know, that trailing stop thing kind of made me hesitate a little bit, or, you know, I wasn't sure how to trade that. Do y'all understand that trailing stop a little better now? Or you understand, like, why it's there? Marcos, would you say it's a good thing that the rule ends during trading? For sure, it evolves me as a trader to pass with a rule like that, but I just like the, yeah, that's not there forever. That's not, and it's only there on that first leg of the trail in a live account. Okay, it's just there as a protection. Okay, so I hope that helps you to understand. But let me just explain like 2 things here. And do we have, so we have the easiest rules in the industry because we're actually looking to fund traders, not just collect fees. Y'all get that difference, right? All those crazy extra rules are just there to get fees out of you. Do we have traders that take an evaluation, fail it, and pay a reset fee? And then a few days later, pay another reset fee? Sure we do. Okay? Why? What are some of the biggest reasons why traders do fail it, or that they do have to pay a reset fee? Patience. Patience is the #1 reason. Right here, 50K account. You can do 10 contracts. Does that mean you should? If you've got a trailing stop of $2,500 and you're doing 10 contracts on NQ, how long is it going to take for the market to pull back against you and hit $2,500 trailing on 10 contracts? I mean, just be smart. Does that make sense? You don't want to. You don't have to go in and do 10 contracts just because you can. Okay. Like, just because the speedometer in my car goes up to 140, does that mean I should do it? Okay. But also, like I said, hey, if your strategy is a scalping strategy and you've got a smaller risk amount, then maybe a smaller account's fine. But you also need to look at, hey, with my strategy, I may need a bigger one. That's the biggest reason people have a problem with the trailing stop and like, oh, it's been a struggle for me to pass this thing because of that trailing threshold. 99% of the time, it's because somebody wanted the cheapest account they could get just to get it. But that account is not meant for their type of trend trading strategy with these big pullbacks. They're using the wrong tool for the wrong job. Does that make sense? Like that is one of the biggest reasons is they're trying to pour a 5-gallon jug of water into a 1-gallon and wondering why it doesn't work. You can't place a trending big move swing strategy stop into a small scalp strategy package with a threshold. Okay, so that's the first thing I need you to understand. Choose the right one. Okay? Am I telling you that as a sales pitch to get you to buy a bigger, more expensive package? Absolutely not. I'm saying get the right tool for the right job. Plus, I'm about to give you a coupon code to get 80% off of these prices listed anyway, okay? I mean, that means a $50,000 evaluation account at 80% off for the first month, it's 34 bucks, okay? Obviously, if we were here just making money on fees, I'm not going to give you an account for 34 bucks, okay? I'm just saying choose the right size for your strategy. Secondly, you don't have to trade max contracts. There's nothing wrong with just trading 1 or 2 to pass the evaluation. Here's the other big mental obstacle that screws people up and causes them to fail. How many days minimum do we require for you to trade, to pass and get funded? So what do you think? Okay, is that a positive thing or a negative thing? Because some of these companies want you to trade for 6 months. We're only asking for 10 individual separate trading days. That's a positive thing. That's a benefit for you, right? Don't make it a negative. What do I mean by that? I can do it in as minimum of 10 days, so I have to do it in minimum of 10 days. Now I'm under this deadline. I'm under this, why should I drag this out if I can make it happen in 10 days? I want to go and do it right now. I want to hit the full profit goal this afternoon on a big move and then just trade a little smaller over the next 9 days and get funded. It's an urgency thing that people try to do it too fast. And when you want to try to do it too fast, what's the quickest way to get there faster? Is to do more contracts. But then what? Oh, that hits this quicker. And then, oh, I got to start over. You get where I'm going with this, guys? I'm kind of trying to tell you how to beat this, how to beat the system here. But it's not about beating the system. It's about beating yourself, like that mental challenge. Make sense? And I'm also not saying go slow just to get you to pay the recurring fee next month. Just get there before the fee happens in 30 days. But it doesn't mean you got to do it in 10. Do it smart. Do it right. It's an evaluation. It's a test. How do you pass this test? That makes sense? Like, I hope you can see where I'm going with all this. Now, quick scenario. I've got a $50,000 account. My trailing threshold is $2,500. Okay? But what if I had 5 of these? What if I had 5 of these accounts? And instead of me having one account and doing 5 contracts on it, what if I had 5 accounts and I was doing 1 contract in each? So now, instead of me putting 5 contracts, like if you get this, it'll be a big light bulb, okay? Hear me out. If I put 5 contracts up against a $2,500 trailing threshold, how smart is that? How easily would that knock me out? Right? Make sense? But what if I had 5 accounts? So in that scenario, I'm putting up 5 contracts against a $2,500 trail. I'm going to hit that pretty quick, aren't I? Now, well, what if I had 5 accounts, 5 evaluation accounts, and I only did 1 contract in each? So I'm still doing 5 contracts. But now I'm putting up 5 contracts against how much of a trail? 2,500 times 5. So $10,000 of drawdown. That makes sense? I'll explain more of this, but do you understand that simple math there of spreading it out? Okay? So, and yes, you can have multiple accounts, okay? We don't recommend any more than 10, and 20 is the actual max we would allow, but you can have multiple evaluation accounts and multiple funded accounts of any of these size accounts, okay? Also, if I'm going to give you a coupon for 80% off the first month and then 50% off any ongoing months after that, if you're interested in the multiple accounts, not a bad time to think about doing it when you can get this one, for example, for like 34 bucks, okay? But what is the point of it? Why would somebody ever want multiple accounts? I'm just going to show you real quick here and I'll let you go. But yes, you can have as many, spreads out the risk between the accounts. Like I just showed you there. You're spreading out some risk. You're spreading out contracts between these different trailing thresholds. I think everybody understands the power of that, right? Okay. But it also can duplicate your profits. All right, I know that y'all use NinjaTrader. I just want to show you where this is real quick. After we're done, if you head over to our website, apextraderfunding.com, under Tools, okay, you can watch the very first video. It's called the Apex, or the Ninja Trade Copier. So let's say you have 5 accounts. You're only looking at 1 account. You're only looking at 1 chart. You're trading 1 chart. But with the Trade Copier, entries that are placed on that chart would copy over to the other 4 charts. You're not trading 4 different accounts, manually entering 4 different accounts, 5 different charts. No. It's a trade copier. It copies over. It can duplicate your efforts between these accounts and help you spread out those risks and spread out reward. So, hey, maybe my system is I'm just going in with 1 or 2 contracts. I'm looking for like 3 quick scalps, and I made 150 bucks for the day on this account. But it copied over into 4 others. So, what did I really make? Okay? Now, that's not a requirement. That's not something you have to do, but it is something we do allow. Okay? And there's many reasons why But there are a lot of traders that like that to help spread that out. Okay, but that's where you can get that information from. So just real quick here. So check it out, Apex Trader Funding. You can go through and watch some of these videos if you want. Go through and look at the different account sizes, see which one fits your strategy or system the best, meaning look at your strategy, look at your system, look back a few weeks. What's the normal kind of pullbacks you have or the normal kind of drawdowns you have with your system? That should tell you the size of trailing threshold you need to pass the evaluation. Not just go and buy the cheapest one or, ooh, I think 150 looks cool. Don't worry about what looks cool. What fits what you need? Okay? Or what's a better way to structure it with having more than one account to get more of a trailing threshold? Figure that part out about what is best for you. All right? Let's see here. Yeah, somebody asked about data feeds. Okay, so like for just example, and guys, I'm not pushing you towards this 50K. It's just our more popular one and easy example. You can get whatever one you want. But yes, for those are normally $167 a month. I'm going to give you a coupon for that. That includes the evaluation, all the back-end stuff, all the training to get it set up. NinjaTrader includes the evaluation, all the back-end stuff, all the training to get it set up. NinjaTrader license key and real-time data. The real-time data connects you to Rhythmic, to for level 1 data and everything you need there. Does not include level 2 data. A couple of people asked about that. Yes, you can go and buy some extra data if you need it. We have links for that once you log in, but it includes regular data. Now, if you go right here to FAQ, I know people hate going through forums and FAQs. I just want to show you how easy this is real quick. If you're like, I didn't really know if I understood that whole threshold thing, just type in threshold, click it. How does the threshold work? There you go. I have a whole video on it where I walk through on a PowerPoint slide, then I go and I explain it differently on a spreadsheet, then I go and explain it differently in live trades. That way you've got it. Okay? It's literally right there. Or if you're like, I want to understand a little more about those payouts. Payouts. How do payouts work? It's right there, written out text. Or I've got videos on it. Then I have written out text on it. Then I literally have a graph breaking it down. I try to show things more than one way because some people like to see things different ways. It's literally all there. You know, what are the rules? Everything you would want to know is here. It's literally on there. Just type it in. Okay. You know, and we're also available. You can hit us up on the chat or a help desk ticket. We're here to help you. Okay. So long as it says if I have multiple accounts, then my profit goal always also multiplies, right? Yes. So if you have, let's say, 5 different accounts, okay, then yes, you would have to hit the profit goal on each one of those accounts individually. But you also have a trailing threshold on each one of those individually, which means you've got a lot more room to work with when you spread it out. Okay? That makes sense? Okay? So yeah, Jan, yeah, we don't really ask for emails to customer support because if you go on our website, there's a live chat right there. Or if you go and you submit a help desk ticket, it's right there and goes directly to the help desk. But the timestamp, a date stamp, and then then they can respond straight to that back and forth to you on the forum there. Okay, so I mean you are notified by email, yes. So here's your response. But yeah, submit it straight to the help desk. And we got to help. Our help desk is open around the clock, by the way. We have support staff all night long. All right, because we do have traders that trade the Asian session or the European session. Okay, so let me wrap up here. I know that I'm going on and on and on here. Well, guys, was this helpful, helping you understand the world of trader funding and prop funding and what's out there in the market, what you want, what you don't want, why you would want it, some different ways to look at it? like I said, I didn't want to approach this from a straight up hard sales pitch because that's not what it's about. I wanted to kind of arm you with the information you needed to be able to go out there and make decisions, but also to have discretion of, that's not a company I want to work with. This is, and you know why. Okay? Because like I said, it all boils down to what would you want if it was your own money? And if it doesn't make sense, then it doesn't make sense, and there's a reason. Okay? So, just as a special offer that we're throwing out there for you guys, when you go to the website, select the plan you want. During checkout, use coupon code COMPASS80. What that will do is it will give you 80% off your first month of any size evaluation account. So it's 80% off the first month. And then if you're not able to pass the evaluation in the first month and you have a recurring fee, then it's 50% off all recurring months. Okay? So 80% off first month, 50% off the recurring months, and that coupon code is good for up to 10 accounts. All right, you can use it 10 times if you want multiple accounts. And that is coupon there, Compass 80, is active through Sunday, July 10th, Sunday night at midnight, July 10th. Okay? I showed you the site there where you can go check out those FAQs to get any extra info you need. Feel free to hit us up on live chat or the help desk. Guys, we could go all day and go through some questions and through some examples. I've kept you so long here. I can't tell you how much I appreciate Kim and Ray having us here to share this with you guys and for you being on to hear me out. Thank you for the interaction. Thank you for the questions. I think I got most of the questions answered. If I missed something, I'm sorry. But I hope that was helpful, guys. Okay? Kim, are you there with me?
Thank you so much. That was really enlightening. Like I said up front, I had talked to Cameron about all of this, and I was pleasantly pleased to see everything that you guys offer because I think it's geared towards the trader. So good stuff. Ian, thank you so much for your time.
Well, and we're traders. We're traders ourselves. So that's part of the reason we, created this was we were kind of honestly disgusted by most of the other options that were out there and wanted to do it differently. And it's kind of made by traders for traders. And most of these other little fly-by-night ones that are opening up,
exactly,
they're just marketers.
That's
what I know anything about trading.
Yes, thank you so much.
And so anyway, guys, thank you so much.